I think it's time to talk about everybody's favorite topic, Bitcoin, and everybody's most hated topic, taxes. But talk about it in the same video. You see, people have been investing in Bitcoin for well over a decade now, and are just now really starting to wrap their heads around the tax implications of owning and trading Bitcoin. Well, I'm here to break it down for you in this video, and by the time you're done watching, you'll know what your liability is if and when you invest in Bitcoin or any other cryptocurrency. So, lovingly, tenderly, gently, smash that like button for the YouTube algorithm, and let's get started. You're watching Finance Squared, and I'm your host, Derek West. And on this channel, we love talking about all things personal finance. And Bitcoin, cryptocurrency, and your tax liability certainly counts in that list of subjects. If those sorts of things interest you, be sure to subscribe to this channel with post notifications turned on so you don't miss a second of the action when all our new videos drop. And they drop weekly. So, taxes. Somewhat of a controversial topic here in the United States. Whether you're a small tax guy and you want taxes to be as low as they possibly can, or you're a high tax person who think, quote unquote, the rich don't pay their fair share. I think we can all agree that when it comes time to file our own taxes, we ought to get a little bit of a sinking feeling in our stomach, particularly if you end up owing. Never a comfortable feeling, depending on your perspective. Anyway, when it comes to the topic of taxes and your Bitcoin, it can be especially true. Unfortunately, what a lot of folks think of when they think of Bitcoin is that it's sort of under the radar and sort of dark money, if you will, and that the government can get to it in almost those sorts of terms, which is not true. Not anymore anyway. Your taxes in Bitcoin doesn't have to be a hard pill to swallow. Let's explore why. Before I even get into that, it goes without saying that I'm not a tax expert. I'm a software engineer and a finance and crypto enthusiast. I'm simply presenting to you the wealth of wisdom that I've accumulated over the years after attending the School of Hard Knocks. I would certainly advise you to speak to your local tax preparation professional and not just listen to some guy on YouTube. In fact, that's the only advice you're going to be hearing in this video. Everything else is purely for entertainment purposes. So with all that business discussion out of the way, sit back and enjoy. There are some general things that you should be keeping in mind when it comes to Bitcoin or any cryptocurrency and your tax liability. 1. Bitcoin has been classified as an asset by the IRS. And this only applies to US citizens, by the way. Whatever your jurisdiction is, maybe it's Canada, maybe it's Mexico, maybe you're in London, maybe you're in Madrid. Those are different situations entirely that I have not taken a look at. So, take that with a grain of salt. This is for US personnel only, but Bitcoin has been classified as an asset by the IRS and should be considered similar to property and is taxed like it is property. All US taxpayers must report Bitcoin transactions for the purpose of calculating your tax liability. Yes, your transactions must be reported. Retail transactions using Bitcoin, including purchases or selling goods or services of any kind, they do incur capital gains taxes. At the point that you sell your Bitcoin to purchase a product, typically in US dollars, you will have gained on your capital, as it were, assuming we're on the upswing in the Bitcoin value roller coaster, that is. But Bitcoin mining businesses are subject to capital gains tax and can make business deductions for their equipment, which is a good thing. But it's probably something you're not going to need to worry about, since most Bitcoin mining is probably too expensive for your average Joe. There are other cryptocurrencies that you could be mining, so keep that in mind. Mining, keep it in mind. Not that hard to say, but sort of confusing. There was a time when all you needed was a top-notch graphics card and 4 or 5 high-end computers to do all your Bitcoin mining. At this point in time, however, it's a much more competitive process. And quite a bit of mining, for Bitcoin anyway, is done by professional mining syndicates and companies, some of which are listed on the New York Stock Exchange. See my video on the best Bitcoin stocks you should buy. But quite a few are overseas in Southeast Asia and so far have not been listed on regular stock exchanges. In any case, sidebar closed. Another thing you want to keep in mind, Bitcoin hardforks and airdrops. Bitcoin hardforks and airdrops are taxed at ordinary income tax rates. And of course, since Bitcoin and other cryptocurrencies are considered property, gifting, donating, and inheriting Bitcoin are all subject to the same limits as cash or property transactions. Got the basics down? Clear as mud? Well, just in case, here are some commonly asked questions that you may not have thought of or that may have arose from that simple high-level explanation. Wait, I have to pay taxes on transactions? Yes. In quite a few cases, that is the answer. Bitcoin is classified as an asset, thus it is treated by the IRS as such. The IRS has made it required for taxpayers to report Bitcoin transactions of all kinds, no matter how small. Everyone that's a US taxpayer, you, me, your grandma, if they're using Bitcoin or any cryptocurrency coins of any kind, we're required to record and keep all those transactions, even if it's simply giving Dogecoin to your favorite creator for making you laugh in one of your favorite videos. All buying, selling, investing, or usage associated with your cryptocurrency should be recorded. And remember, incorrectly reporting your income could result in penalties, interest, and even criminal prosecution. The The last thing you want to have happen to you is end up in the slammer because you didn't pay your taxes on your Bitcoin. But the sale of Bitcoins that were mined personally to a third party, that is a standard capital gain. Let's take a look at some examples and see how they land. The sale of Bitcoins that were mined personally to a third party. In that particular example, that's a standard capital gain. You mined a Bitcoin, it's valuable. This is considered personal income in the eyes of the IRS. Another example, the sale of Bitcoins bought from someone else. This is another type of capital gain. So if you purchase Bitcoins from an exchange and then sell that Bitcoin to someone else, even to another exchange or even to the same exchange for a profit, then you are again gaining from that capital, and that gain must be taxed. If you're using Bitcoin to buy goods and services, both mined and acquired. If you purchase Starbucks coffee using Bitcoin that you mined at home, then you have to pay taxes on the transaction. The same is true if you purchase the Bitcoin from someone else, including an exchange or other third-party type individual. The difference between using the Bitcoin you mined yourself to purchase goods or services and the Bitcoin you purchase from someone else to purchase the exact same goods or services is how the coin looks in the eyes of the all-seeing IRS. In the first scenario that we talked about, that's considered personal income. In the second scenario, it's considered more of an investment transaction and is thus subject to capital gains taxes. Let's imagine for the time being that you purchased a fraction of a Bitcoin for $5,000, and also imagine that you sold it for $10,000. Yes, in this scenario, the Bitcoin you owned more than doubled. Not an uncommon occurrence during the last 2 years. Then you owe capital gains tax on the $5,000 profit from the transaction. How would you treat Bitcoins received as payment for goods and services? If you get your salary in Bitcoin or any other cryptocurrency, then it's reported as personal income for the purposes of the tax man. The value or cost basis for the cryptocurrency is its price on the day at which it was used for salary payments. So if you got paid the day before Bitcoin took a nosedive, your taxes will suck pretty hard. But if you got paid the day before Bitcoin takes off, your taxes will rock, depending on the tax bracket that you land in, of course. Do you pay taxes when you mine Bitcoin? Yeah, you do. Cryptocurrency mining is a taxable event according to Uncle Sam. The fair market value or cost basis of the coin is its price at the time at which you mined it. Like I mentioned in the high-level points at the beginning of the video, you can make business deductions for equipment and resources used in mining. The nature of those deductions differs based on whether you mine the cryptocurrencies for personal or individual gain. If you're mining a cryptocurrency out of a cryptocurrency mining business, then you can make the deductions to cut down on your tax bill. But if you're just mining the coins out of your mother's basement, then you'll not be allowed to make these same kinds of deductions. Unless, of course, you incorporate that operation and turn your cryptocurrency side hustle into a real gig. What about when you convert from different cryptocurrencies? The good news is, when converting from one crypto to another, like let's say converting from Dogecoin to Bitcoin, well, that's classified as a like-kind transfer under the Internal Revenue Code 1031. So it's almost exactly the same as a 1031 exchange in real estate, where you swap one building for another and defer the capital gains taxes. What is a hard fork? It's that thing you used to stuff your chicken mango salad into your pie hole. Kidding. It's also when a blockchain split occurs, with the new chain changing protocols and creating a new cryptocurrency. In events like that, holders of the original token may be given new coins. This sort of occurrence is also referred to as an airdrop by Crypto Aficionado magazine. Just kidding. I'm not sure if there is a Crypto Aficionado magazine. It's actually a good business idea. Anyway, one might wonder what the tax implications are for such an event. In a 2019 ruling, the IRS classified that hard forks do not result in gross income if the wallet holder does not receive units of cryptocurrency. If you do get coins from the hard fork, an airdrop, or if you get coins by the marketer of this new token, then that does qualify as income for the recipients. In that case, the quantity of coin received and the value of those coins at the time of receipt will determine how much your tax liability will come to. Another common question. I've just donated a bunch of cryptocurrency to my favorite charity. What are my tax implications? Cryptocurrency donations are treated very similarly to cash donations. They are tax deductible. An appraiser will assign a fair market value for the coin based on the market price at the time. Notice that a lot of your tax liability is based on the market value of the coin at the time that it was donated or earned or etc. Keep that in mind. But the donor is not required to pay any taxes on the price gain. Now, cryptocurrency is not a simple subject by any means, and I'm not even talking about the taxes. Understanding the protocols and how the token really works so that you're an informed investor is a serious undertaking. Learning to account for all the transactions and taxable events for your cryptocurrency is quite another task altogether. Another task that you may not have considered is subscribing to this channel and turning on post notifications. You know, ringing that nice shiny bell, so you don't miss out on a great discussion like this from a true cryptocurrency OG. And don't forget to like this video if you liked this video, and drop us a comment with your thoughts on cryptocurrency taxes. Do you have your cryptocurrency tax liability all straightened out? We're all dying to know. And remember, a goal without a plan is a wish, and a goal with a plan and no action is simply a wish list. Take it easy, guys. Thanks for watching this video. I'll see you next time. Like, subscribe, hit that notification bell, share, bug your friends. These videos are all important, sort of. And I'll catch you next time. Peace.